Sam Stovall on whether you pick the Davids, the small caps, or the Goliaths, the large caps. Tell us what you think, Sam.
Hey, Liz. Well, I think that the Davids could end up surpassing the Goliaths, at least in the near term, because there's much more potential for optimism, good momentum, etc. The small caps had been underperforming the larger caps for an extended period and actually had been emerging from a contractionary environment that a lot of technicians felt were holding back the other indices. But if you look back to 1980, the Russell 2000 has gained 6.6% on average 6 months after the Fed has started a rate easing cycle. So that's a potential benefit for the overall category. And if you look at something called the rule of 24, which basically says that PE plus inflation should equal 24 for the S&P Small Cap 600, that implies a more than 20% advance in the coming 12 months versus only 5% for the S&P 500.
And yet you're picking the big banks, JP Morgan, U.S. Bancorp, and PNC. Let me just ask you, you mentioned the Federal Reserve. We've got about 30 seconds left. Fed appears to be in contracting mode at the moment. So how will that affect the banks?
Well, the banks, I think, could continue to be under pressure in general. The question was, what kind of banks do we favor right now? Our analysts go for JP Morgan, U.S. Bancorp, and PNC Financial. But usually when the yield curve is narrowing, then that squeezes the profit potential for banks in general.
Well, Sam Stovall of CFRA, it's great to have you on.